Hello, and welcome to the inaugural Minority Report. Our goal is to review some of the big news in the cannabis sector from week to week and add some critical analysis. In this first vid, it's going to be a little bit different because we're going to go over that week time frame and we're just going to focus on one company, and that's Canopy Growth and all of their recent news. We'll begin with a story that feels like an eternity ago. It was simpler times, and Acreage voted positively on their takeover by Canopy. It was overwhelming. It was 99% who voted in favor of the takeover, and a lot of people misunderstand and believe the deal is now done. So there's a segment who now thinks Acreage is gone and it's part of Canopy already after the vote. In actuality, there is 7.5 years for this deal to be completed. And now for the second misunderstanding is that a lot of people think that for the deal to go through, cannabis needs to be legalized in the US. That's not true. Cannabis needs to be permissible in the US. So that means the States Act or the Safe Banking Act, which could come into effect within the year, is enough to make cannabis permissible so that this deal can be actualized and Acreage would be taken over. Big news from Acreage once the acquisition was complete. And that was that CEO Kevin Murphy said, well, the company size is going to change dramatically. What does that mean? Acquisition on the horizon. So within a few weeks, Acreage is going to announce an acquisition. The rumor of the day was that Slang Worldwide would be acquired by Acreage, and if that happened, Acreage would then be acquired by Canopy Growth, and of course, eventually Canopy Growth is going to be acquired by Constellation Brands. You could shorten this and just buy STZ. They're doing really well right now, despite their losses with Canopy. Of course, this rumor is absurd because Canopy already has a deal in place with Slang, so chances are it's going to be something else in the US. The payout happened on the 26th or sometime thereafter, so if you bought in by the 24th, you were eligible for that payout. And there was a huge run out before the payout, and surprise, surprise, the price falls more than the $2.63 payout shortly thereafter. And Acreage stock is continuing to fall, which is amazing because even when it was $16 at the time of the payout or the day after the payout, that's still a $10 discount. And so now we're looking at a $12 discount. So if you're looking to get Canopy shares, this is a great way to get them on the cheap. I think it's a great under the radar play. Acreage is not getting a lot of love right now. You could argue it's never gotten a lot of love. Some people argue that it's because it trades in US dollars on a Canadian exchange and people don't want to pay that conversion premium. But Acreage in and of itself right now seems like a solid play. Where does this leave Canopy Rivers? Canopy Rivers is the US arm of Canopy Growth so that they don't get delisted from the American exchanges. It still has a role, but it's obviously now Plan B. It's still viable. It's got a lot of pieces. So if you like these Frankenstein monsters type company that have several parts put together, go for it. While all this was going on, in the background, you have Canopy's earning report, which came out on the 20th. And it wasn't expected to be great, and it was a little worse than expected. Now, Bruce Linton then comes out and says that, well, we're not going to be profitable until 2020. Interesting. To contrast that, you have their competitors, Aurora, who said, well, by the end of the year, we're going to be EBITDA positive. So do you prefer the little or hyperbole? Do you want your CEO to come out and say, we're going to have positive earnings by the end of the year, and maybe they might disappoint? Or do you want your CEO to come out and say, hey, profitability is a long ways off, and if they actually exceed expectation, you're a little pleasantly surprised? I'm not sure. Take your pick. The really interesting reaction to earnings comes from Constellation. And there's a line that was focused on and taken out of context. And that is, we were not pleased with Canopy's recent reported year-end results. Of course, to take that line without looking at what precedes it, we remain happy with our investment. And what comes after, we continue to support Canopy aggressively, is a little misleading. But it still stood out to me as extremely negative. Constellation is the biggest shareholder in Canopy. And so when they say we're not pleased with Canopy's recent results, it sort of signals to all the shareholders that, hey, I guess as a shareholder, we shouldn't be happy either. So it's a bit of a red flag. At the same time, we have other developments happening. So on June 25th, Mr. Linton says we're going to grow cannabis outdoors, which is interesting because for years he had said you can't make money growing canopy outdoors. So it's 6 years in, and now you're going to say we need to try everything? That does not instill confidence. That is not something you say to investors. We need to try everything is something you say to a 2-year-old when you're trying to get them to eat broccoli. What he should have said was something like, yes, in the past, I've said you can't make money growing cannabis outdoors. I stand by that for most companies. But with the technology we've acquired to different form factors over the years, we are in a very special position to make this work. But that's not what he said. In the same article, it also highlights that on the phone, he says to Bloomberg, if investors want us to be profitable globally right now, then I'm working at the wrong company. How's that for prophetic? He said that on the 25th, and on the 3rd of July, he was fired. Canopy says he's just not suited for their next phase of growth. So it's going to be interesting to watch and see who this rock star they bring in to fulfill the next phase of their growth is going to be. How will he be judged? Did Bruce Linton overspend the war chest? Will there be write-downs? Well, let's look at some of his bigger acquisitions. There's the Hiku brands that he paid $270 million for. There's the $430 million paid for Ibu, and of course, there's also Spectrum Columbia and BC Tweed that can be added to the list of overspends. So if you're the new CEO coming in, wouldn't it make sense to push for write-downs on these so that you start with a clean slate? It might be something to look for in the short term. So there may be some short-term negativity. We'll see. Some final thoughts. Bruce Linton will be seen as a pioneer and one of the godfathers of the cannabis industry. He is still loved. Look at Martello. He wears the shirts, they go up 100% the next day. That's Canopy shareholders backing their boy. Martello wasn't run up by ACB fanboys and girls. These are Canopy shareholders who have confidence in Bruce, and by extension, I believe they still have confidence in Canopy Growth. They've always had confidence in their $4 billion investment from Constellation. Whether or not Bruce used that appropriately, he certainly made a statement with it. You can't take that kind of war chest and sit on it. It doesn't make any sense. And even if he overpaid for some of those deals, look at what it forced his competitors to do. And there are deals that look similar that end up taking down one of the big three at that time. So, part of these videos are for my own edification. And it's sort of how I work out my thought process. And so I thought, well, since I'm doing this anyways, maybe I'll try and share these for public consumption. Yes, it can be improved on. So let me know your thoughts. Just need to remind everyone, this video is for entertainment purposes only. Please be aware that none of the content in this video constitutes financial advice. Do your own due diligence, and remember, I'm not your mom. Thank you, and try and leave the world a better place than it was when you got here. Have a good day. Thank you for your time.